Sage here for kalkinemedia. Thank you for joining us for this educational series topic. Please subscribe to the channel and press the bell icon. You'll be notified of our latest videos. Today we're covering what is maturity. In finance, maturity is the date agreed upon by the parties to a transaction or financial instrument later to which it is ought to be renewed or it will cease to exist. The term also defines the pre-decided date where the term of a contract or agreement finishes to settle the total amount on loan or bond back to the lender. So in other words, we can say that maturity is the date that predetermines the lifeline of security, thus informing the issuer about the last date of paying their principal and interests. Once the maturity date is passed, the issuer becomes free from all the obligations related to the security. Therefore, maturity is closely associated with deposits, foreign exchange, spot trades, interest rates, commodity swaps, forward transactions, loans, and fixed income instruments such as bonds. Explain the term maturity date. The maturity date can be defined as the due date of a principal amount of a note, draft, acceptance bond or other debt instrument. On this date, the principal amount is supposed to be repaid to the investor. The date is usually mentioned on top of the financial papers or printed on the certificates of the instrument. And on this day, only the principal amount is paid, while the interests are paid throughout the life of the debt instrument to the investor. The maturity date also represents the termination date of an instalment loan. It signifies that the loan must be paid back in full on the maturity date. So how can bonds be categorised based on maturity date? Bonds can be categorised into three categories based on maturity date. These are as follows. Short-term bonds. Short-term bonds are the ones that have a maturity period of 1 to 5 years. These bonds are generally issued by entities like investment-grade corporations, government institutions and companies rated below investment grades. And short-term bonds are preferred by bondholders who want to preserve their funds for a shorter duration when favourable market conditions. Now, in addition, short-term bonds are easily accessible than any other bonds. Hence, they are known to be very liquid. Next is intermediate bonds. Intermediate bonds are neither too short-term nor too long-term. Now, these types of bonds come with a maturity term of about 5 to 10 years, and as a result of an increased period, the intermediate bond yields more money than the short-term bonds, but not more than the long-term bonds. Intermediate bonds are preferred by those investors who have a higher level of risk tolerance power. And obviously, with a longer period, the risk increases and the investment is subjected to face a lot of ups and downs in the market. Next is long-term bonds. And long-term bonds are usually identified by the ones that have maturity terms of about 10 to 30 years. These types of bonds do pay a much higher yield than any short-term or intermediate bonds. Long-term bonds are preferred by investors who have higher levels of risk tolerance so that they can go through several market fluctuations over the life of the bond. Such investors aim to earn a huge revenue over a long period. A long-term bond locks an investor with his investments for a relatively long period. However, that can be changed if there is a call facility or if the bond is a convertible one, such as a convertible bond. So how can relationships between maturity date, coupon rate and yield to maturity be explained? Bonds that have a long-term maturity offer coupon rates to investors similar to the quality bonds offered in the case of short-term bonds. The reason behind offering coupon rates are as follows. Risk of defaulting on loans of the government or the corporation increases. Growth of inflation rate with time. And the factors mentioned just now must also be taken into consideration. while paying returns to the investors. And thank you for joining us on the report. If you do like the information, please like, share, comment on the video below. Subscribe to the channel and just press the bell icon. You'll be notified of our latest videos. For more information and regular updates, please go to the website kalkinemedia.com. I'm Sage for Kalkine Media.